Hey guys, so I just want to talk about the few stock market crashes on the S&P 500. I believe this topic is really relevant, especially today in 2022, because right now we are in the midst of another stock market crash. And so just kind of looking back at the few stock market crash in history can just give us some key takeaways, and there's a lot of lessons to be learned just from examining about the few market crash that happened prior, and just what we can learn from it. And so let's get started. So if we take a look here, this is Black Tuesday, and this was the major of all of the crashes, dropping about 86%, and it took about 7,256 trading days, so that's like over a decade for this to recover. And this was known as the Great Crash, or the Black Tuesday, which started off the Great Depression. And during this time, a lot of people were borrowing money, a lot of money that they didn't have, and throwing it into the stock market, because right before then there was a big economic boom, and it was so bad that the bank was doing the same thing. The bank was taking money from people's bank account and investing it into the stock market. And what happened? It blew up into this big bubble that popped, and this drop was particularly bad because this was before there was a lot of regulation into the stock market. This is before even the Security and Exchange Commission was established, so there wasn't a lot of regulation into investing, and because of that, people were just borrowing money and throwing it into the stock market. Bank were borrowing money and throwing it into the stock market. And what happened is that when the stock market crashed, the bank didn't have any money for people to withdraw, so people would put their money into the bank, and literally when they are trying to withdraw the money, the bank didn't have any money to give the people back their own money, because they had already threw it into the stock market, which has eroded away. So people lost a lot of their money that they would put in the bank, and at this time there was a lot of distrust between people and the banks. So this next one was the OPEC oil embargo. It dropped 48%, and it took about 1,899 trading days to went back to before the crash. So during this time, there was political tension in the Middle East, where Nixon and U.S. supplied Israel with military aid, which causes the Arab country or the OPEC country to embargo the U.S. and ban them from buying their oil, which resulted in oil prices skyrocketing. And there was the oil got so bad that gas company were limiting the amount of oil people can buy, because there was a big oil shortage in the US, and that causes the price of everything to skyrocket. As a result, the stock market crashed. So this next one is the Dotcom bubble. It crashed 49%, and it took about 1,880 days to recover. And during the dot-com bubble was the early 2000s, and this is where the internet was becoming an up and coming new thing, and a lot of people were in this frenzy of just buying a lot of internet company without really looking into the viability of the company, like their cash flow, their balance statement. People were just throwing money straight into internet company without really doing research, and it blew up into this big bubble. Eventually it crashed, and a lot of investors that invested in company that couldn't survive the bubble burst lost all their money, and as a result it dropped 49% at the peak. Okay, so this next one is the global financial crisis, also known as the 2018 housing crash. Took about 1,379 trading days and dropped about 57% at the peak. So this is during the time when bank were basically lending money to people who can't really afford to buy the houses, and people were taking out loans to buy houses they couldn't afford, and the bank were selling these mortgages as called mortgage-backed security to investor, and as a result, a whole bunch of people started defaulting on their mortgages because they could not afford to pay in the first place. And so a lot of investors who bought these mortgage-backed security ended up losing their money, and a lot of houses ended up being foreclosed, and the bank or people just ended up sitting on a whole bunch of foreclosed house, and no one was willing to buy them because, you know, there was a big crash, and yeah, there was so much houses on inventory that they could not sell it, and of course the housing market crashed as a result. Alright, and then we have Black Monday. It's a little less of a drop, 29%. Took about 402 trading days to recover, and this crash actually started in Hong Kong in around 1987, and the Hong Kong market crash, and it causes the European market crash and then the US market crash. And this one was during this time was when internet trading, like trading using the computer, was becoming an up and coming thing. And when the Hong Kong market crashed, it caused a lot of stop loss to be triggered, and that spread to the European market and then eventually the US market. It's a lot of a smaller crash. And then we have the last crash, which happened in 2020, and of course it was a COVID-19 crash. It took about pretty fast, 117 days to recover, a 34% drop at the peak. And during this one, this is when the pandemic was rising all over the world, and a lot of companies had to shut down, and basically our society had to shut down, which as a result caused economic catastrophe. But it recovered pretty fast because the federal government stepped in, and they were printing a lot of money and putting it into the market to kind of just help boost the market. And at this point there was a lot of money printed, and now even in 2022 there's inflation rate is at an all-time high at around like over 8% as a result. And there we have it, guys, the major crashes of the S&P 500. So some key takeaway I would like to say is that whenever there's a crash, usually prior to that there's a bull market. And it makes sense because nothing goes up forever. The market is not going to go up forever. Whatever comes up must go down. And I would have to say, usually when investors are really greedy is the time for you to be scared, and when the investors are scared, that's the time for you to be greedy. And this is what Warren Buffett had said, and it's true every single time. When the market is up, especially when the market is up and the economy isn't doing so well, like the COVID-19 crash where the economy was not doing well, but the stock market kept on going up and up and up, and eventually there will be a correction to follow because the market is not reflecting what the actual economy is, and it's because the Fed kept on printing money and giving it away to corporation and giving it away to people who's putting it in the stock market. And the economy is not doing well, but the stock market is doing well, so it's not in sync with the economy, which eventually gonna lead to a correction. Okay, and there we have it, guys.